You're saying underweight tech. Now, keep in mind, our Mike Santoli actually put out an article just yesterday or maybe 2 days ago that Microsoft and Alphabet alone are 20% of the gains in the S&P this year. How do you go underweight tech with that?
Well, I think the important thing here is that you're not getting rid of your tech holdings. You're not getting rid of your growth holdings that you have at all. You're just balancing out your portfolio. So when you look at the early part of this year, we were overweight growth. We had all of those names. We were participating in the upside of all of those names. But look, come around the summertime, we decided we needed to start trimming some of those names back and reinvesting into some of the more cyclical or value names, because we do think going into 2022, even though growth will come down a little bit, even though earnings may not be quite as strong as what we saw this year, we think that people are underestimating what the fundamentals are going to be and that cyclicals will do well. So when we talk about the cyclicals, we look at some of the consumer discretionary names, but you have to be choosy. And financials is really the space that we hold dearest to our heart going into next year, and where we would actually put most of our efforts.
Hey, it's BK. So I got a question about the cyclicals, because it's an interesting call, and you know, I love a contrarian call. But if I look at the economy, things seem to be stalling out, slowing down a bit. I've got a Federal Reserve who has said to you, hey, listen, we're going to withdraw some liquidity, as well as the fact if inflation gets out of control, we are likely going to induce a recession, or at least that's the only tool that we have to reduce inflation. How does that fit into this cyclical play?
Yeah, so BK, we're not completely on board, I think, with what the market is saying they think the Federal Reserve is going to do. I know everyone's talking about March being a live meeting. We're actually looking for it to be pushed back a little bit, maybe June. And I'm not going to totally rule out that the first hike isn't until the second half of the year, because I think what the Fed has done when they have increased the tapering is to give themselves some breathing room. Tapering ends around the end of March. That should be when the inflation numbers peak, when you look at year-over-year comparisons. So inflation will start to come down, and I think that's what the Fed is counting on and giving them a little bit of room. So, you know, the market usually continues to do well and move higher up until the first rate hike. So if history holds true here, you've got at least the first half of the year for the market to do well before we start to see some issues. And when you're looking at financials, we think the longer end of the curve needs to move higher. We think that financials are cheap to the rest of the market. They have strong balance sheets. There's potential for dividends to move higher next year. So when you look at some of those cyclical plays, focus on those financial names, and I think it will do well for your portfolio.
So, Victoria, when you talk about cyclicals, I'm assuming you're talking about things like staples, consumer discretionary. I'm going to kind of follow up on Brian's question. Are you concerned at all about inflation? We saw core PCE at 4.7%, very high. Also, just some questions about supply chain when it comes to staples and discretionary.
Yeah, so inflation, do we think inflation is going to be higher than where it has been historically, higher than that 2% level that the Fed was always targeting? Yes, we do think it's going to be higher than that. Do we think it's going to stay up where it is right now? No, we don't. We think some of the pressures that we're seeing from the supply side will start to come off. We think some of the year-over-year comparisons, so those base effects, will start to roll off. So you're going to have that number come down. Yes, you're going to have wages possibly continue to move higher, and rents and housing move higher. So that's going to be your stickier part. But we do think it'll come down from these high levels. So yes, more inflation, but not to the extent that we're seeing a lot of people say we're going to have for the rest of the year.
All right, Victoria, great stuff as always. I appreciate it. All right.